Good day, everyone, and welcome back to our lesson. Today, we're going to be continuing with Chapter 5, Working Capital and Cash Management. Our lesson today is lesson number 22, Cash Management. I'm still your lecturer, Mr. Majia H. We're going to be covering cash management, which I'll explain everything in detail as the lesson continues to goes on. So this lesson will be covering page 225 to 237 on your textbook, Finance in Media, 4th edition, published by Edge Education. So for extra curriculum or for extra lesson or extra learning notes, so you can go and watch the recording that have been attached, which the link of the recording have been attached to this lesson. So please make sure you watch it if you still need more understanding as well as more practical knowledge in terms of budgeting. So one of the most important things that I always say or advise is that please make sure you attend your class regularly. Make sure that you participate during classes and make sure that you complete textbook activities that you are required to actually get to complete. So under this lesson, we are going to cover budgeting, cash budget, definitions for budget, and as well as processes and reason why do we prepare budget. So I think the part of processing we're gonna cover it on lesson number 22 according to the lesson plan. So it is just here because it's gonna be a continuation of this lesson. So these are the learning outcome that by the end of the lesson you should be able to explain budgeting, understand the cash budget of the business, understand why do business prepare budgets and how is it helpful to the business. So let's start with our lesson for today. So on our first part of our lesson, we're just going to start by talking about the importance of proper management because this is where everything starts. So before we talk about the management of cash, it starts with the proper management to say how well does the management of the company plan for the business. Do they know the business? What are the process that they should follow on the business? So those are some of the things that they need to actually we need to understand in order for us to be able to manage the cash of the budget efficiently. So here it says that uncertainty is probably the first word that comes to mind when we speak of the future. So predicting the future has become a challenging affair in dynamic media industry of today and often requires manager to plan far in advance. So one of the most important thing for the under the importance of proper management is that we need to plan for risk. There is always risk that is involved in future in terms of future operation of a business. So it is very much important that when we plan, when we do our planning, we assess all the risk that we believe that our company might actually face. So some of those risks also involve cash management, which we have to assess or plan for it to say that are we gonna run any cash management problem in the future. Second, in terms of the second, sorry about this moving. So in terms of the second part, it says that the success of a media business is largely dependent on how well it is managed, and management plays a pivotal role in determining the way which such business is run and direction it is moving in. So this is another part that shows that for proper management to be there or for a company to be successful, managers of the business need to make sure that they understand the way in which the business has to actually get to be run, as well as the strategy that have been put in place for the business to continue to achieve its objective or to grow. So those are things that one of the management people actually need to understand so that the business can grow. So he'd continue to say that people in management should be able not to think about current issues only, but should be able to anticipate and find solution to problem and situation in the future. So most of the time when we work with budgeting is that we are not working with current information. So we are working or we are anticipating future possibility that might actually occur and things that we assume that this is how things will be run or this is how what we are going to achieve in the future. So this is all in terms of cash management or working capital management. So it involves understanding the future operation of the business, that also meaning including future problems and situation that we might find ourselves in. So that means that for a business to be able to run efficiently, management of the company should be able to anticipate future problems and also solution to those particular problems. So that will lead to us having a good proper management within a company. And the other, lastly, it says that the main element of management are planning, organizing, activating, as well as controlling. So, which some of these are what we call characteristics of a budget. So, when we talk about cash management it's all about planning, organizing, activating, and controlling, where we get to assess whether this business is running efficiently and there are no challenges in terms of the business operation. So, then this now leads us to cash management. So in terms of cash management, I'll just start by explaining the terminology of cash management and then elaborate more in terms of what we are going to do under this lesson. So when it comes to cash management, so cash management does not only involve budgeting, where we only get to look in terms of the outflow and inflow of money. It also talks about the type of money or the money that we need for to run the business on a daily basis, not looking in terms of the inflow and outflow, but the money that we just gonna need for normal activities within the business. So that is what cash management involves. So it's a very broad topic that can actually be broken down in a number of activity. So under this lesson, we're only going to focus mostly on the cash budget, because cash budget is the one that gets to determine if the company will have sufficient cash or will actually get to run at losses, or are we gonna need cash, are we gonna need financing. So those are some of the things that we actually have to consider under when running a business, especially in a media environment. Media environment actually requires a lot of money because of advertisement, ways in which the business gets to be run. So those are some of the things that requires a lot of preparation and budgeting, so that you don't actually get to run at a loss or buy things that are not necessarily supposed to be bought. So in terms here, it says that budgeting is a process of creating a plan to spend your money, and it is a phenomenon that originates from people tendency to overspend. So most of the time back then, you find that people start a business, they don't actually have a plan, they don't know how much, they just have enough cash to say that this year we actually have 20,000. So while they have that 20,000, they have got a budget of 100,000. They don't actually have a plan on how that 100,000 is actually going to be spent. So one of the most important thing is to actually get to prepare a budget which will indicate how much of the capital, how much of the money should be spent and where it should be spent and when and how. So that's the importance of budgeting. So here it says that budget forms an important part of planning and control. They can be used as a tool for future planning as well as a tool for exercising control over cash receipts and payment, and also income and expenditure. So we get to use these as a way of controlling capital or money within the business. So when we talk about working capital previously, we did mention that working capital is the short-term assets that the company will actually need to actually be able to operate on a daily basis. And while it actually does that, it will actually also need some short-term liability to cover some of its operation where it does not have enough sufficient uh, cash. So meaning that when we prepare the working capital, we also need to prepare the cash management to say we do know that we're going to need the following assets. If we're going to need the following assets based on the cash that we have, how much can we be able to achieve, how much can we be able to buy, and then from there we can then assess in terms of how much money we're actually going to need or borrow in terms of our day-to-day operation. So those are some of the things that we need to take a look into under cash management. So here it says that why do individual as well also prepare budget? So when it comes to individual prepare budget because they find themselves with very little cash left the week before their next pay. So this is what happens most of the time. So we end up having to draft a budget to make sure that we properly plan and actually make sure that we have sufficient enough cash to make us survive for the whole period or for the whole month. So if you don't actually get to prepare budget, most of the time we find ourselves stranded in the middle of the month and having to borrow from friends and as well as financial institution to actually get to survive. So that just shows that there is poor control in terms of how you manage your money. So meaning that you will actually need to prepare a budget for yourself to be able to identify uh, possible option or ways in which you can minimize having less cash on hand before the month actually gets to finish. So it says that by initiating and adhering to a strict cash budget, you can ensure that you have adequate cash on hand at all time. So meaning that you'll be able to see how much of your money is going where and how much are you left with and how much you can actually save by deviating from an unnecessary expense. So a cash budget does not only just show where the money is going, it also allow you to analyze where your money is actually going to say that I actually spent this much on this item. This can then allow you to overthink or to think in ways in which whether this item or where you're actually going to spend your money, is it necessary to spend all this money there on this account, or actually is there a way that you can minimize this expense if it is a necessary expense? So that's what the cash budget allows us to do when it comes to managing our funds. So in a business environment, every division, even though it's a media company, every division you will be required to actually prepare a budget for your own department as well as division. So even if you are an employee, your boss can actually get to ask you if you are one of those core employees or the one of the most performing employees or important employees that gets to work outside the office most of the time. They will actually get to ask you to say that based on this current financial period, how much do you expect to spend and what do you expect to do? How much money do you expect to use for assets? How much money do you expect to use on the road? How much money do you expect you're gonna need for the service that you're actually rendering to us? So you'll need more understanding of how to actually get to draft an individual budget for yourself so that you can use it to actually get to assist the department in drafting the budget for the department that will allow the department to be able to operate efficiently without having money problems. So when they prepare the budget, they will also get to identify that during these particular months we're gonna run out of cash, we're gonna be operating at a deficit, which the deficit means that they're gonna be operating at a loss, meaning that whatever they plan to buy as well as the money that they plan to receive, the money that they're going to receive will not be enough or more than the money that they're going to spend. So therefore they will have to make a plan and to go and do what short-term borrowing for that particular month. So this is where we also bring in the working capital concept to say that when we prepare the working capital concept, when we estimate the short term or the current liabilities, we estimate them based on our cash budget. So our working capital will show us in terms of the assets that we need for the daily operation as well as the short term that we're gonna need. So those short term liability are identified from the cash budget or cash management, where we are able to see that we are going to actually need a short term credit, or based on what we are actually going to how to operate our business, we do know that we are going to have clients that are going to buy on credit. So it will always be advisable also for us, or it's gonna also be good for us to also buy from our supplier on credit, because when we sell on credit we're gonna still need to collect our money from our clients, and therefore once we collect then we can be able to pay back off our credit. But if we pay off our credit before we collect, therefore we're gonna run at a short, so at a deficit, meaning that we'll still need cash to continue the operation before we collect from our supplier, from our customer. So therefore that's where the cash budget comes in. So here it says that for each and every budget have got a cycle. So it says that we prepare a budget each and every financial period. before the beginning of each and every financial period, we are going to prepare a budget. So that is the cycle that we have to follow. It says that before the start of a fiscal year, managers at all levels take into account past performance, market feedback, and anticipate future changes to initiate plans for the next period. Senior managers give subordinate managers a frame or of reference, a set of specific financial or non-financial expectation against which they will compare actual results. So those are some of the things that actually happen during the budgeting cycles. So at the beginning of the year, the top or senior managers will actually draft to say that this financial period we actually have the following amount of cash which we are going to use for the business operation. So let's give out uh, our other department managers or business managers how and see how much money they're actually going to need to run the business. So under this case, what actually happens is that from each and every division they will be given a specific budget, which to say that for your department you need to spend the following amount. So please draft us a budget in terms of how much money you are going to spend or how much money you are going to need and receive during this current financial period. So what the managers will actually go and do is that they will prepare their own department budget based on what they've been given. If what they've been given is not enough, then they can actually justify that through their cash budget and explain all those line items to say that based on this information or based on our analysis or financial records, we are going to run at a deficit because of the following reasons. So we're gonna still need more cash. If the business have the cash, then they will actually give more allocation to that particular department. But if they don't have, that's when they go and do the borrowings. So it says that managers and management accountants investigate any deviation from the plan. So once the plan starts and managers start operating, so what will actually happen is that managers of the management accountants and the managers will then take a look to see if the budget is being prepared accordingly. And if it is not being prepared accordingly, therefore, this is where managers and accountant will go and sit down and say, what are we actually doing wrong and how can we actually get to do this? So these are some of the things that they will get to assess. So in terms of budgeting, so another definition of a budget is that a budget is a financial document used to project the future income and expense. It is also an estimate of cost, revenues, and resources over a specified period, reflecting the readings of future financial condition and goal. So others could also say that a budget is a quantitative expression of a financial plan for a defined period of time. And another definition says that a budget is a sum of all money allocated for a particular purpose and the summary of intended expenditure along with the proposal of how to actually get to meet these expenditures. So those are some of the definition of a budget. So when it comes to budgets, we have got the most important budget, which is the cash budget, which gets to reflect the movement of cash within a business to say that this is how much cash we expect from our client, this is how much cash we expect from selling some of our assets, this is how much cash we expect from rendering the services to our client, and then this is how much cash we expect to spend or pay back to our supplier who we bought things on credit from. So here it says that proper cash management is a paramount to the success of any modern business. So it is important that we manage our cash uh, very good so that we avoid having a business failure or being unable to operate as a business because of low cash flow. So here it says that having large portion of a business sales on credit could be detrimental in a business because it could mean that the firm has attained significant profits, but the cash has not yet been received from debtors. So it is convenient for our customer to buy on credit and pay later as they will need some of those assets to be able to survive during the whole period of the whole month. So that's why most of the time we buy some of the things on credit so then we can pay it later. Same applies to us as a business. So we go and buy from our supplier on credit because we don't actually have the cash now. And then once we generate or convert those inventory into cost of sales, which is gonna then go to which is where our client comes in and buy those on credit, then later on pay us, then we can be able to pay our supplier. So this is where it then say, hence proficient trade receivable collection. It is important when analyzing your financial stability, or or preparing your proper cash management. So when you're doing your cash management, it will be important that you also forecast your trade receivable. How much debt are you willing to give away to your customers, and how are you going to collect that money from your customer? And then also how much money you are going to how much debt are you going to need from your supplier, and how you are going to pay that off. So it is very important that when you prepare your cash management or your cash budget, you also put the focus on that. Even though you are not receiving money at the same time when the purchases actually happen, the important is being able to understand when you are going to receive when, and how much are you going to collect when, and how much are you going to get on credit, and how much are you going to pay it back. So the cash budget only shows cash item and only relevant cash flow for a particular period. To say that if you're going to have credit sales of 100,000 in January, so those 100,000, when you prepare a cash budget, you don't reflect the 100,000 on January. What happens is that when you prepare cash budget, you only show when are you going to collect that cash. So if that cash is going to be collected, 50% of it in January, 50% of it in February. So when it comes to a cash budget, what actually happens is that you are only going to reflect under January only the amount of cash you are going to receive. Any amount of cash that you are not going to receive during the month of February does not get to be recorded in that particular month. So if you have got amount of cash received in advance for a specific month, you record it on the month that you are going to receive it, not on the month that is actually allocated or planned to be used for. You allocate the money once you receive it. So we work on an accrual basis when it comes to the cash flow. So here it says that an important section of the cash budget is the schedule of budgeted of receipt, which is also known as debtor's schedule of payment, where we get to assess how much are we going to collect on a specific period, because we do know that we are going to sell our items on credit over a specified period of days or specified period of month. And then we also need to consider in terms of ways in which we are going to collect those cash, and to see that if based on the collection of this cash, are we going to have enough cash in terms of receipts compared to our payments, so that we can be able to identify whether we need additional capital or not. So one of the processes of a cash budget is that we've got a cash budget format. So for you to be able to identify whether you're going to need cash or not cash, so you start with the opening balance, which is the amount of money you have at the beginning of the period. Then you add all the money that you're going to receive from your customers by selling your product in a specific period, and then subtract all the payment you're going to make for that particular period. Then this should equal you the closing balance, which will be the amount that you'll have at the end. So when we prepare a cash budget, so a cash budget does not just only show us if we're going to need money only. It also shows us if we're going to have more money in the bank. So if we're going to have more money in the bank, we can also then use the cash budget to identify, to say, from this money that we have, how much of it should we invest, so that we just only have appropriate money, we just have sufficient money in our cash account, so that we just manage the business efficiently. So it allows us to be able to see, if to say that if we have got a required minimum balance in our business, to say that every time when we're running our business, let's make sure that at least we have got 20,000 in sitting in our business account every month. If we have got more than that, then let's invest that money somewhere else. So that is what the cash budget actually gets to identify for us. And to say that if, let's say for example, we have got a minimum cash balance of 10,000 during the month of February, or it indicates that, it will just show that we are going to actually have to borrow 10,000, so that at least we still have a minimum of 20,000 in our bank account. But if we have 30,000, then we're gonna go and invest the 10,000 somewhere else, so that it continue to grow and earn more interest, or allows us to be able to use that for future reference when we no longer have enough cash in our bank account. So we've got class activity, which is activity 5B and activity 5C. So what I'm gonna do is that these I won't be able to actually get to show them here because of my laptop. So I do not have the pen to actually write and pinpoint most of the things. So what I'm gonna do is that I'm gonna do this tutorial separately with the one of the previous lesson, which was lesson 21. So I'm gonna put them in Excel and then analyze them for us and be able to identify in terms of how to actually solve this kind of problem. And we're also gonna be able to put down the application of working capital as well as cash management. So this will then allow us to be able to see the importance of these two concepts, working capital and cash management. So please stay tuned for the recording in terms of how to actually get to do this. For those who are going to attend contact classes, they will be able to see in terms of the application to say this is how we get to apply this in practice, and then this is the importance of doing this. So during class, during the contact class, then I will be able to show this. But for the part-time student, I will just show another recording. I'll do another recording, which will be Excel recording, explaining everything, showing you all the calculation that you have to perform, explaining each and every calculation, what it actually means, and how do we allocate that specific calculation. So these are all the things that I'm going to show you guys. And lastly, it's the importance of why do business actually get to prepare budget. So which is I also call this the objective of a budget, to say that what are the objective of the budget, why do we prepare budget. So the main reason for preparing a budget is to ensure that unexpected surprise do not have detriment effects on the business. So in addition, other reasons for preparation budget are as follows. So we normally prepare budget to avoid surprises of having not enough cash flow to operate the business. So some of the reason is to assist us in planning for annual operation, to see how much of cash we're gonna need and how much of it should be allocated well, and if we're gonna need surplus, or we're gonna need to invest some of the surplus cash, or we're gonna run on a deficit and go and borrow. So that's a part of the planning process. Another thing about preparing a budget is that it communicates the plans to various departmental manager, to say that this is what we need to achieve at the end of the year, so that the business can continue to exist and so that we are able to generate profit. For us to generate profit, we need to be able to achieve the following target in terms of cash flow and cash expense. We need to have only the following, or minimize our expense to the following, and we need to be able to generate the following revenue. Another thing is that it motivates, so the budget also gets to motivate. So to motivate managers, workers need to achieve or surpass the goal of the organization. So when we prepare a budget and we give you a budget, so we are saying that this is your target, you need to be able to achieve this target. So it also gets to motivate our employees as well as manager, to say that we have a budget that we have to reach, and if we reach this budget and we pass the budget, therefore there will be performance bonuses that will be achieved. So therefore it will therefore get to allow us to motivate our employees. So that's another thing about the budget, it allows employees to be motivated. And another thing is to control. So budget allows us to control the way in which cash have to be used within the business. Without a budget, we'll just have managers being spent left and right without even having necessary reason for that money to be spent on that particular item. And then we also have got to evaluate performance of managers. Since we prepare budget at the beginning of the financial period, some of the most important thing is that when it comes to budget, budget allows us to evaluate a way in which the department or the company was run during that particular year, to say that we had a target, we said that we want to achieve this, we anticipated that this is how much cash inflow we're gonna receive, this is how much cash outflow we're gonna receive. So let's take a look at the actual result and see if we managed to achieve that. And if we did not manage to achieve that, then we can then question ourselves to say what actually went wrong. So we perform what we call a variance analysis to actually get to determine to us in terms of what actually went wrong and how much did we deviate from in terms of what we budgeted and the actual results. And this is the end of our lesson. So one of the other things that I will actually get to explain on the other recordings that I will do over these two topics that is not part of the textbook, it's types of budget that you need to be aware of. So I've got different types of budget that you will need to be aware of, that these are those type of budget will actually get to help you to determine which type of budget best suits your department, best suit your company, best suit yourself in terms of things that you need to achieve in your life. So those are type of budget that are there, that each and every budget have got its own specific purpose. So those are some of the things we are actually going to take a look into when we perform those other activities. So this is the end of our lesson. So on our next lesson, which is lesson number 22, we're gonna be it's lesson number 23, we're gonna be talking about budgeting processes, the things that you need to follow in order for you to implement a good budget. So please stay tuned for the next lesson. We're going to be talking about budget processes, and please enjoy the rest of your week as well. So because the next recording will be on the following week. So please enjoy their day and stay blessed, and please make sure that you take a look at those activities before I upload the recording, so that by the time I upload the recording you have got a better understanding of how these processes work as well as the application. So thank you very much for tuning in. Stay tuned.